Cloud, this week's Precious Metals Market Update. There's so much stuff out there, I don't even know where to start, but I want to just hit a couple important points. Next week, the information will start flowing quicker as China will have their SDR special drawing rights with the International Monetary Fund starting next Monday morning when it opens. The speculation is still that they'll start with around 15% will be their value of their Chinese yuan or renminbi that'll be put in the basket with the British sterling pound, the Japanese yen, the US dollar, and the euro. Their weight to start with is rumored to be 15%. We still have not heard their audited gold reserves or their audited treasury bill reserves in the US, and that should be coming at the end of this week before they start taking their special drawing rights. But what I do want to talk to you about slightly, because I believe that we're getting ready to enter a decade or more changing economic situation. And I want to go back real quickly and look at the last 16 years. When we gave a buy signal in gold in 2000, it was 256 an ounce. It ran up to over 1800, and then we had this fallback into the 1062, where the year started this year, which was a retracement similar to the boom of the stock market in the 90s. So we looked at that point, and you say, as an investor, where do I want to put my money? I've got a menu of things: stocks, bonds, real estate, gold, silver, and all different other kinds of investments. But what I want to look at real quickly is, where do you think the markets are going now? Where do you feel comfortable having your money with all this money being created with the Bank of Japan, special drawing rights with China, the United States with a $20 trillion debt, just raised the ceiling another trillion? Well, over the last 16 years, gold's gone from 256 up to the 1340 range for 540% gain. The stock market, the Dow Jones, in the same time frame, has gone from 13,700 or 8 up to 18,000, 62% total in 16 years. Gold 540%, stock market 62%. Now there are dividends that weigh in with that, so it's not, stock market's done a little better than 62% over 16 years, but not much. But look at everything going on. Sharia rights. You've got the Muslim Islamic Committee meeting to let people living under Sharia law own gold. You've got the Bank of Japan doing quantitative easing to come out of a 26-year recession. You've got us, we can't sell our treasuries, so the Fed has to print more money, and we may be looking at negative interest rates here. Where do you think is going to do the best the next 2, 3, 4, 5-year period? I can't believe you answer stocks, but if you do, then that's where you should stay. You've got to make the decision. It's your money, it's your responsibility. But for me, in my house, we will have a bigger percentage in gold and silver than we've ever had. As I make this speech to you right this second, I've got the biggest percentage of my net worth in precious metals I've ever had. And it's the only way I feel comfortable. How can you feel comfortable with all these landmines out there, and especially with China? If they start liquidating our treasuries, or if they come in with a large number tonnage of gold similar to the US, the dollar's going to fall like a rock. Now, the next thing I want to say is from 2000 to 2012, for every 1%, the dollar went down, gold went up 13%. This year, gold's up 28% for the year, but the dollar's only gone down 4%. So it's only gone up half of its normal rate. But that's because there hasn't been a panic. When we have a panic, if the dollar does go down 10%, then many experts are predicting the first half of next year, we could be looking at a doubling in the price of gold and silver. So you, as the investor and the steward of your money that God's given you to manage on this earth, it's time for you to make tough decisions. Yes, next week, gold and silver going up cost you more. But here's the last thing I want to close with. I want to make this brief today. Is sources I've had in Europe for over 35 years have told me that all the gold for delivery in COMEX warehouses is spoken for. Now, what does that mean? That means if crap hits the fan next week, as we expect it will, then they've already parceled out who's going to get the gold for delivery in COMEX contracts. What's it going to do to our premium here? It's going to shoot it straight up. So in other words, let's say gold's at $13.50, and I could normally buy something for $13.70 I was going to sell you. Well, now it may cost me $13.50 plus $100, because the physical gold, when the central banks take it, it's going to be gone, because eventually we'll have a gold-backed standard. But they'll wait as long as they can, as long as the price down. But once gold starts moving, there'll be no physical gold and silver. And this is coming from the best sources there are in the world. So I would tell you to get ready. If you're interested in a gold IRA, you need to give us a call at 800-247-2812, 800-247-2812. We can discuss a self-directed precious metal IRA with you. And if you're still in rare coins, you definitely need, in my opinion, to get out of them and get into bullion, gold, and silver as quickly as possible. And certainly palladium and platinum are looking very interesting also. So this is a short update this week. Next week we'll be looking at a lot more statistics, but it's important I get this information out to you. So with this week's Precious Metals Market Update, this is Tom Cloud signing out.